Welcome back to the O Show, everything crypto and NFTs every day. In this super short and sweet episode, we are going to talk about this meme coin that just rallied to the moon. Is it too late to get in? A Bitcoin market update. And of course, the Federal Reserve working with banks for cryptocurrency exchanges. Let's get into it. As you are liking, commenting, subscribing, and setting alerts for the show, we can take a look at the crypto market. Things are not looking too terribly sexy, but that is okay. Bitcoin is still looking fairly bullish in this gorgeous uptrend. However, we're getting ready to kind of break support here. So you're saying, Wendy, how is this bullish if we're going to break support at 23.6? Well, even if we do get a little bit of a pullback and we do in fact kiss approximately 22.4, it is still pretty bullish because we're holding the trend line here. Pullbacks, corrections are good, especially when we're seeing a lot of upside movement. Again, if we do get that pullback to approximately 22.4, but we're able to reclaim 23.6 and then break out above this downtrend from the swing wick high at $69,000 and retest and claim 26.5, I'm 100% with it. As always, make sure you are adamantly taking profits and have a trading or investing plan. This next story, Dogecoin continues weekend rally up approximately 22% in the last week. So when we take a look at Dogecoin, we went ahead and broke out above the 8 cent area. This area was important for me as indicated on the Sunday night stream because we had a couple taps here. We tapped this area of resistance at approximately June 26th. We almost tapped it again at July 19th, and we finally were able to flip it into support, break above the EMA 100 today. Will it hold or not? Well, taking a look at MACD is looking decent. Taking a look at the 12-hour chart. 12-hour chart is showing a little bit of a pullback. 4-hour chart is showing a little bit of a pullback, but we're still holding the line. We've got a lot of really, really great support with our EMA stacked in a bullish aspect. Taking a look at the hour chart, yes, we are definitely correcting. What I'm looking for here, babes, is I'm looking for us to hold the line at approximately 8 cents. If we are able to do that, we can probably sustain and continue up this bullish trajectory and hopefully retest the EMA 200. Also, too, please note that Doge or dogecoin memes, whatever, those are pumping as well. Be very, very, very careful and understand the risks associated with that. This is a little bit of a complex story from CoinDesk regarding the US Fed opening pathway for crypto banks to tap central banking system. So this is when we're talking about crypto banks, when I first read this, it reminded me of like Celsius, Voyager, BlockFi, or even crypto exchanges like FTX US. So that's kind of what I figured when I was reading it. But let's go ahead and read the different tiers. The central bank will create a 3-tiered system for evaluating whether a financial institution should have access. So basically what they're doing is they're coming in hot and saying, we need to regulate you and make sure your funds are safe. And this is probably due to the Celsius, Voyager, BlockFi debacle and other cryptocurrency exchanges failing as well, allegedly. So let's go ahead and read through this. They're going to be giving master accounts from institutions with novel charters, including crypto banks and their trade associations. Master accounts let institutions gain access to the Fed's payment systems. Without this access, firms must team up with partner banks who have master accounts. It will create a multi-tiered system allowing the Fed to adapt its evaluation process for granting access depending on what kind of financial institution is applying. Each tier corresponds to a more stringent review process. Tier 1 banks would be federally insured. Tier 2 banks would not be federally insured, but they're still subject to prudential supervision by a federal banking agency. And the third tier consists of firms that are not federally insured and not subject to prudential supervision by a federal banking agency. New guidelines appear to provide clear room or crypto players seeking access to master accounts. So basically what this means that all crypto exchanges, from my understanding, are going to have to comply with this process. They're going to have to kind of register or fall under a bank that is federally insured, FDIC insured, to make sure your assets you have on the exchange are safe. Obviously, there's going to be different tiers, but I really think we're going to see a lot more heavy regulations coming into play to protect consumers. During this time, I think it is a good thing considering what's happening with Celsius and Voyager, BlockFi. And again, I've lost money on 2 out of 3 of those platforms. But at the same time, are we going to allow for regulations to really kind of take over our freedoms, our liberties when it comes to crypto? Comment your thoughts below, and thank you so much for watching. I will catch you later. Bye-bye.